Saudi Arabia has recently announced that it will no longer use the US dollar for oil transactions, effectively ending the long-standing petrodollar agreement between the country and the United States. This significant shift in global economics has significant implications for the global financial landscape and the US economy. The petrodollar system, in place for 75 years, marked the US dollar as the world's reserve currency, granting economic stability and access to rising asset prices. This arrangement allowed the US to maintain dominance over international trade and control the world's energy supply. The agreement was initiated after World War II and was seen as a key component of the US's global economic influence. Saudi Arabia's decision to ditch the US dollar is part of a larger trend of countries reducing their dependence on the dollar. The country's commitment to the BRICS alliance, which includes Brazil, Russia, India, China, and South Africa, is a significant factor in this decision. BRICS countries have been working to reduce their reliance on the US dollar for international trade and transactions. The shift away from the US dollar in international trade and transactions could signal the end of America's global financial dominance. The trend of countries moving away from the dollar is already underway, with China and Russia having reduced their dependence on the dollar for some time now. The end of the petrodollar agreement between Saudi Arabia and the United States could have significant implications for the global economy. If Saudi Arabia and other oil-exporting countries start selling oil in currencies other than the US dollar, it would decrease global demand for the dollar, potentially leading to its depreciation. The shift away from the petrodollar system could create uncertainty and volatility in currency markets as countries adjust their foreign exchange reserves and trading patterns. A weaker US dollar could make imports more expensive for Americans and reduce the purchasing power of US consumers. It could also lead to higher inflation and interest rates. The end of the petrodollar system could disrupt existing trade relationships and create new ones as countries adjust to the changing economic landscape. This could lead to shifts in global supply chains and trade flows. The decline of the petrodollar could create opportunities for other currencies, such as the Chinese yuan or the euro, to play a more significant role in international trade and finance. Saudi Arabia's decision to ditch the US dollar for oil transactions is likely to have a significant impact on global oil prices. The shift away from the petrodollar system could lead to increased volatility in oil prices as the market adjusts to the new financial landscape. Additionally, the potential for a price war if Saudi Arabia fails to achieve its desired results, weakening global demand, and heightened geopolitical tensions in the Middle East could all contribute to price fluctuations. Furthermore, the shift in market share as customers adjust their purchasing patterns could also result in price swings. Overall, the end of the petrodollar agreement is likely to introduce more uncertainty into the global oil market, leading to increased volatility and potential price swings in the short to medium term. The yuan is expected to play a significant role in the future of global oil transactions, particularly as more countries diversify away from the US dollar and seek alternative currencies for international trade. Here are some key points that highlight the yuan's potential. China has been actively promoting the use of the yuan in international oil transactions, particularly with its strategic partners like Russia and Saudi Arabia. This initiative aims to reduce the dominance of the US dollar in global oil trade and increase the yuan's global usage. The yuan has already started to gain traction in international oil transactions. For example, Indian refiners have begun paying for some oil imports from Russia in yuan, and China has also shifted to the yuan for most of its energy imports from Russia. The increasing use of the yuan in oil transactions could potentially challenge the US dollar's dominance in global trade and finance. This could lead to a decline in the dollar's value and a shift in global economic power dynamics. The rise of the yuan in oil transactions could also have significant geopolitical implications. It could give China greater influence over global energy markets and potentially create new economic alliances that could challenge the US-led global economic order. The end of the petrodollar agreement marks a significant shift in global economics, with far-reaching implications for the US economy and the world at large. As countries like Saudi Arabia move away from the US dollar, the US will need to adapt to a new global financial landscape where its influence may be less dominant.